Today on Fear and Greed, healthcare and tech stocks lead the way on the ASX in 2024. The $2.2 billion sale of parts of Perpetual's business to private equity looks close to collapsing, and the ABC gets a very commercial boss. Plus, the ASX jumps nearly 1%, and Myer takes a step closer to taking over a bunch of retailers. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 18th of December 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. It's supposed to be slowing down, isn't it?
in theory.
We've got the Myer today, the government's annual, semi-annual budget update. We've got so much going on. It's great.
Yeah, it is very exciting time of year. You would not expect it, Sean, but hey, here we go. The main story this morning, healthcare and technology stocks have really been the best performing companies on the ASX 200 in 2024, with breakthroughs in medicine, expectations of lower interest rates and strong earnings growth combining to ensure 11 companies, get this, 11 companies doubled in value in 2024.
Oh, to know that 12 months ago, top of that list, Mesoblast, up 500%. It's a biotech company, stem cell research. It's coming out of stage 3 trials. Its main drug is aimed at helping kids who have had major surgeries and experienced a rejection of transplanted tissues. Mesoblast share price jumps up and down a fair bit, very, very volatile. But the latest successful stage 3 clinical trials has really helped it, up 500%. Number 2 is buy now, pay later group Zipco, done well all year, adding customers and retailers in the US and elsewhere. It's one of the few non-healthcare or non-tech stocks in the top 11. We're talking 11 because they're the ones that doubled. Analytics and intelligence software group Nui was up 250%. Horror period after listing, seems to be getting things right there. Other medical stocks in that top 11, Sigma Healthcare, thanks to its deal with Chemist Warehouse, Pro Medicus, Telix Pharmaceuticals and Regis Healthcare, tracking app Life360, gold company Spartan Resources, Pinnacle Investment Management as an investment company, and Hub24, a wealth platform. They all more than doubled in prices as well. Of the large caps, let's say the top 25 companies, Gaming Group Aristocrat Leisure topped the list, followed by WiseTech Global and Xero. A few call-outs, well-known companies that have had great years with share prices up at least 50%. Guzman y Gomez, surprised many. JB Hi-Fi, AMP. Who would have thought?
Oh, there you go.
Yeah, Qantas, it's done well. IAG and, of course, Goodman Group, the industrial warehouse business.
It's quite a list. That's the best, though, Sean. What about, this is coming, right? What about the worst of the ASX 200 for the year?
Well, much more of a mixed bunch. I would say the energy sector is probably among the worst, though none of them make the worst 10. The only mega cap in the bottom 10 is Fortescue Metals Group, which has gone backwards by 35% on the back of lower iron ore prices, management upheaval, and doubts over its push into renewable energies. The worst of all in 2024, though, lithium miner Mineral Resources, down nearly 50%. Founder Chris Ellison found himself embroiled in all sorts of governance issues in the second half of the year. That's on top of much lower lithium prices. Domino's Pizza was next worst, down 47%. Poor sales in Japan and Europe. CEO stepping down, a lot going on in that company. Battery metals companies generally didn't have a great time. IGO, Pilbara Minerals are in the bottom 10, as are Kiwi companies Spark New Zealand and Fletcher Building. IDP Education, well, many people loved that 12 months ago. Regulatory changes really hurt that one. While Nine Entertainment is also in the bottom 10, one of the worst performing stocks of the top 200.
All right, so that is a fairly comprehensive overview of everything that's happened in 2024. Let's narrow it right down now, Sean, to just the last 24 hours. How did local markets go yesterday?
Well, it's a pretty strong day. The S&P ASX 200 finished up nearly 1% to 8,314 points. Plenty of winning sectors, real estate investment trusts, healthcare, industrials, tech. Biggest losers, energy stocks. Big banks all did well. So too, Goodman Group, Aristocrat Leisure, REA, Pro Medicus, not so good, BHP and Woodside. Couple of interesting developments yesterday. PEXA, the property settlement exchange backed by the Commonwealth Bank, jumped 8% after announcing a new CEO. Novonix jumped as much as 16%. In the end, it was up 5% for the session after it received a conditional loan from the US Department of Energy. IT services and solutions provider Data Number 3 fell 10% after changes to its partnership with Microsoft in Australia. And the Australian Energy Regulator is likely to reject APA Group's bid to have its recently acquired Basslink electricity cable converted into a regulated asset that would have given it a more regular stream of revenue that hit APA share price yesterday.
A regulated asset. I don't think I've really heard that term before.
Lots of infrastructure. So when you say regulated asset, it's about companies that power lines and lots of infrastructure like toll roads and stuff like that, where there's a limit to what you can increase prices, but you always get an increase in price.
Okay. All right. International markets. I know we've talked a lot about local markets. Let's take a quick look overseas.
Well, Bitcoin hit a new record yesterday morning after President-elect Donald Trump reiterated plans to build a national Bitcoin stockpile. Some pundits think it might go much, much further. It's trading about $108,000 a unit. I heard $180,000 a unit. Who knows? Oil prices are a touch lower, as is gold, and the Aussie dollar. Michael is buying 63.6 US cents.
All right. Now, Sean, after the show, we've still obviously got plenty more to come first, but after the show, you have an interview coming up today, and this is a good news story, this one. Caroline Gurney from Future Generation is your guest.
It is a good news story because Future Generation is an organisation which invests money for people. People get good returns. The people who invest it, the fund managers, do it all pro bono. They don't charge fees. And Future Gen has raised about $90 million for charity over the last 10 years. The latest fund, Future Generation Women, is purely, the fund managers used are only women. All the charities that the money will go to are for women and their families to help them in their futures. Just a fantastic story and a fantastic initiative by Jeff Wilson from Wilson Asset Management and Caroline Gurney.
Yeah, great conversation. It is coming up later on. In the meantime, Sean, we have got a lot still to cover. We're talking about the ABC's new boss, some pretty shocking allegations against Optus, a legal ruling against Donald Trump. Plenty coming up. We'll be back in a moment with the rest of the day's business news. Sean, Federal Treasurer Jim Chalmers will today release the Myer Mid-Year Economic and Fiscal Outlook Statement, which is really an update on how the budget is going. And he's warned everyone not to get too excited. Don't expect any big numbers to help reduce the cost of living crisis.
Well, he said any numbers around the cost of living crisis won't stand out, was his phrase. The focus instead will be on rolling out what's already been announced. The Myer will have $14.6 billion worth of savings from reprioritising funding in areas like aged care reforms and the Indigenous Advancement Program, according to Katie Gallagher, who's the Finance Minister. It will also confirm that the budget is back in deficit and will be for some time.
Reprioritising funding is an interesting term, isn't it?
Well, yeah.
Golly, it's quite a loaded term, that one. Anyway, we'll see what comes out mid-morning when that's all announced. Now, independent expert Grant Samuel, which is a company, not a person, very confusing, won't recommend the $2.2 billion sale of Perpetual's wealth management and corporate trust business to private equity group KKR.
Very much puts a major spanner in the works of that particular deal. It comes after the ATO last week handed Perpetual a tax bill of about $500 million, about 3 times the original estimate. Grant Samuel said it did not think the sale was in the best interests of shareholders. As a result, it's very difficult for the board to now recommend that deal. Grant Samuel's determination came after it took into account what the ATO did last week. The two sides yesterday said they're continuing to engage constructively in relation to the transaction. Now, Perpetual's been looking to break up the business as it attempts to turn around its fund management operations. Its share price was flat yesterday. Lots of speculation that deal probably won't go ahead, though. We still don't know.
So I'm trying to get a handle on share price movements, and we've talked a lot about how kind of share prices are really go up and down, and it's a lot based on kind of future expectations, etc. I would have thought, though, that based on that news yesterday and that speculation, that the share price would not have been flat, that it would have actually gone backwards.
So it was flat. The market itself was up 1%. So the way you think about share prices is always relative to what the market did.
Mm-hmm.
So when you think of it that way, it actually underperformed.
Underperformed.
And
Okay.
also, I think it wasn't unexpected.
Right. Okay.
So that's part of it too.
I learned so much, Sean.
You'll get there, Michael. You will get there.
You are so full of wisdom and other things.
Yeah.
Another independent expert report out yesterday, Sean. Big day for the independent experts, wasn't it?
It was.
It involves Myer's proposal to acquire Premier. Try that one more time, shall I? Premier Investments, right? Can I just say that?
Yeah.
Premier.
Basically, Myer, it wants to buy Premier's apparel brands business, Michael. I'll say it for you. Got the tick of approval yesterday from Kroll, the independent expert. So what that business is, Myer wants to buy Just Jeans, Jackie E, Dottie and Portman's, as well as JJ's. The independent expert, Kroll, said the retail market has changed and the emergence of groups like online players Temu and Shein, both Chinese organisations, means it's essential for organisations like Myer to expand. Kroll said the deal is both fair and reasonable, and as highlighted by the collapse of Mosaic Brands in recent months, also of Oriton in 2018, large-scale retailers are better positioned. Under the deal, Myer will have a network of 783 outlets in Australia and New Zealand, annual revenue of more than $4 billion if shareholders vote for the deal in January. Melbourne retailer Solomon Lew will end up with 27% of Myer. I reckon that deal will go ahead.
Yeah, involving Premier Investments apparel brands business.
That's it. Well done. You could just say, PIAB.
Yeah, because I'm not going to stumble over that too. I got there in the end. Premier Investments apparel brands business.
Oh, so close. Let's move on.
Unfortunate, wasn't it? BHP and Rio Tinto, Sean, will join with BlueScope Steel to build Australia's largest electric iron-making furnace, a move that they say may speed the decarbonisation of steel production. That would be a major development, right?
Oh, this is very, very cool. The pilot project is near Perth. It'll produce 30,000 to 40,000 tonnes of molten iron a year and will initially use natural gas and hydrogen supplied by Woodside to reduce iron ore to what they call direct reduced iron. This is according to a joint statement from the companies. Once operational, the project aims to use hydrogen to generate the power. According to Bloomberg, the technology could reduce emissions by up to 80% if renewables and green hydrogen are used. It may help show that iron ore sourced from the Pilbara region of Australia can be smelted using an electric furnace rather than the traditional blast furnaces, which of course are powered by coal. More than 70% of steel is currently produced using coal. That's why it emits so much carbon. If this works, big step forward in terms of reducing carbon emissions while making steel.
Yeah, really exciting. Now, I mentioned this one earlier, Sean. Former Nine CEO Hugh Marks will take over as managing director of the ABC.
Glutton for punishment, dare I say.
Oh, golly. Nine is such a big beast of an organisation. To step into yet another beast with many, many components and a very high-profile, high-pressure role, he must love the media.
Hugh Marks definitely loves the media. And Nine, you had to answer to shareholders. ABC, you have to answer to every single Australian. I think it'd be such a difficult. I mean, David Anderson, the current managing director, is stepping down. He was into his second 5-year contract, and only after a year he's stepping down. So that was a surprise. Hugh Marks taking it up. Well, good luck to him. He said yesterday he won't be scared to make tough decisions to help the national broadcaster. He wants to use social media to expand its reach. He'll be proactive in handling workplace cultural matters, saying the problems recently exposed at his former company, Nine Entertainment, had given him a heightened level of awareness. He ran Nine from November 2015 to early 2021. He resigned after disclosing he was in a relationship with a member of his leadership team. He now takes on the ABC. The chair is Kim Williams, who himself is a fairly, forthright individual. This is going to be fun.
It's going to be fascinating. It's going to be a spectator sport, this one, Will.
It will.
Sean, Optus sold mobile phone plans. This is really quite disturbing, as alleged. Sold mobile phone plans to vulnerable Australians, including a deaf and mute homeless man and an elderly man with Alzheimer's disease who later collapsed in one of its stores. This is all alleged by the consumer watchdog.
It also created fraudulent contracts with First Nations people, according to the allegations. The Australian Competition and Consumer Commission is suing Optus for unconscionable conduct, saying it not only sold products to people it knew couldn't afford them, but sold their unpaid bills to debt collection agencies, according to a story in The Australian. It even sold debts to third parties when Optus senior management and its parent Singtel knew some consumers had no knowledge of the contracts, which appeared forged. Optus, which has since apologised to consumers, also dismantled its profit protection team, responsible for investigating suspected compliance issues during the height of the allegations, despite protestations from staff. Again, allegations from the ACCC. We are still to hear from Optus. This is just one side of the story, but as you said, Michael, very disturbing.
Turning to international news now, Donald Trump has lost his request to toss his conviction in the New York hush money case on presidential immunity grounds, though the case may not proceed to sentencing as the president-elect continues to challenge the verdict.
The judge ruled that Trump had failed to properly raise objections to most of the evidence he claimed was subject to immunity, except for the testimony of one witness. He said that, this is the judge, Juan Merchan, said that even if the challenged evidence fell within Trump's presidential authority, prosecutors used it to prove decidedly personal acts of falsifying business records, and that there's no danger of intrusion on the authority and function of the executive branch. Finally, Justice Merchant said that any possible error in admitting evidence was harmless, in that it would not have changed the overwhelming evidence of guilt against Trump.
Sean, an earthquake of magnitude 7.3 has struck near Port Vila in Vanuatu, according to the US Geological Survey.
The quake struck at a depth of 43 kilometres, 30 kilometres west of Port Vila. It was followed by a magnitude 5.5 aftershock at the same location. The extent of any damage isn't immediately clear. A video posted on social media shows a building that houses some diplomatic missions to Vanuatu, including those of Britain, France and New Zealand, with some damage to their structure. There's buckled windows, debris around the place. Jim Chalmers, our treasurer, yesterday said that officials were still gathering information about the situation on the ground. Vanuatu government websites were offline in the aftermath of the quake, and phone numbers for the police and other public agencies didn't connect, according to Associated Press.
Okay, up next is the Fear and Greed daily interview. Your guest today, Caroline Gurney from Future Generation. A great conversation. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Wednesday, the 18th of December 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.